If you look at our four strategic market units, Americas 1, Europe, and APMEA have shown sequential growth for the last 3 quarters. And either they were, some of them, one was flat and others were also shown year-on-year growth. Our challenge has been with Americas 2, and this has been a very specific, client-specific issues. One is client decision, change in client's decision, and second one is we've not been able to ramp up some of the large deals that we have won there. Outside of Americas 2, I think the other 3 SMUs have delivered. And if you look at from an industry perspective, healthcare typically is soft for us in Q1, and consumer and energy and manufacturing and utilities is resources is the two segments that among the sectors that we could have done better. But net 3 out of the 4 SMUs have shown sequential growth. That's how I would summarize it. And also this quarter we won strategic deals, a $1 billion deal with opportunity for up to $2 billion with Olam. We also acquired their IT arm, Mindsprint. In fact, I want to take this opportunity to welcome all the employees out here. We are excited to have you in our Wipro family. And we also had a good pipeline, and I think that right now the focus for us is to execute to that. The market is competitive, and we want to be competitive as well in the market. And each of these deals are going to be very strategic, and we're going to stay focused on executing to that.
And how do you look at the guidance that you're given for Q1? Because that would disappoint the street. So you're saying that the client issue may, go into the Q1, and that may impact your growth on a quarter-on-quarter basis for the first quarter?
That's right. I know this particular client, we had an impact in Q4 and in Q1, and that would be the end of it.
You expect revenue to normalize from here? What is the kind of guidance that you can give to the street with respect to the full year of FY27 from a demand perspective, from revival of orders? You got a good order book that came in Q4. How do you sum up all this into a projection or maybe a forecast for how FY27 is looking for you?
So clearly, that we only guide for next quarter. But if I have to broadly talk about how we see the market, one, obviously the leading indicator for us is pipeline. The pipeline for us right now is robust. It is secular across markets and across sectors. So that's one thing that I can definitely call out. Second one is, some of the deals that we have won, the points that you made, some of them we need to execute with rigor and, bring in the ramp up. That's the second part of it. And the third part of it is, with AI coming into picture, we see a lot more newer projects and opportunities coming in where the clients are looking at us to help them in terms of whether it's AI advisory or consulting or new AI projects which are AI-led and AI focused. And our Wipro intelligence is really resonating with our clients, and we want to leverage that in terms of whether it's a run project or a build project or a completely a reimagined project for our clients.
Aparna, can you come in here and give us a sense of the margin profile here? Because you got margin which was closer to the upper end that you have guided. But going into Q1, how do you see the margin? And if you can also sum up Q4 for us, the kind of currency tailwind efficiency that came in and the cost efficiencies that you were able to bring in.
So our operating margin performance for the full year was at about 17.2%, which is an expansion year on year of 15 basis points. We've done well to hold the margins in this band between 17 to 17.5 that we had alluded to earlier for the last 2 years. Our performance in Q4 had 3 factors impacting. Certainly, we had 2 incremental months of the DTS Harman acquisition, which was dilutive, and 2, the salary increases that we've rolled out effective 1st March had 1 month of impact. And this was offset by the rupee depreciation benefits that we've got. So those were three factors that played into the margins. As we look ahead into Q1, yes, the weaker revenue environment and the fact that we'll have two incremental months of wage impact, we do think it could cause some volatility on a quarterly performance, but in the medium term, our endeavor will be to remain in this narrow band that we've stated.
Saurabh, if you can come in here and give us a sense of the kind of attrition rate that you've seen and the kind of employee addition that you're going to see in FY27.
Sujit, Q4 we ended on a attrition of 13.8, which is a 20-month low. I think it speaks of the environment in which we are operating today. We've also done our MSI salary increase in March, effective for people. And the headcount overall has been flattish. I feel that as the way forward, the close linkage of revenue and people will become looser and looser as we move forward. It's not going to change overnight. And we will continue to hire based on demand. I think attrition is coming down. We have room for improving our utilization. So we have enough levers to make sure that as demand comes, supply side will not be a challenge. But yes, we have seen over a period of time our freshers hiring has come down. We ended with 7,500 for this year. We are not giving a number for next year. We'll see how the demand pans out and then we'll take a call.
Srini, if you can give us a sense of the buyback as well, 15,000 crores at 250 rupees a share. Little lower than what the street was expecting, and the premium is also a little lower. How do you, what has been the reason behind this buyback for you?
So, if I can come in on the capital allocation, we had stated that our capital allocation would be 70% or higher. The board has taken into consideration the excess cash we've had. You would note that FY26, we gave out dividends of $1.3 billion, which is significantly higher than what we have done in any of our, recent years. We are doing a buyback after 3 years. The premium is in with due consideration of what it has been, what some of our peers have done the last few buybacks in, and what will keep our EPS accretive, right? So keeping into these few things, we decide on the premium. In fact, on the size of the buyback, there is a statutory norm that we can go up to 25% of the paid-up capital, including reserves, with a shareholder approval, and therefore we will be taking the shareholders' approval because we are maximizing it. We're going to be looking at buying back 5.7% of our equity. So that's the maximum that's allowed as per law. So it's pretty much in line with what we can do. And we are happy to return this cash back to shareholders after their approval.
If you can also give us a sense of how AI has been part of your new deal wins which you have brought in, and how do you see AI playing a role for future orders for you? If you can also break us what is the kind of order book with respect to AI specific in your entire order book of over $3 billion in Q4.
One of the things, Sujit, we're not calling out AI separately, whether it's booking or revenue. But having said that, since Olam deal is in public, it's going to be driven with Wipro intelligence, right? So in that, the point I'm trying to make is that every deal that we actually participate in, irrespective of whether it is run and operate or change and transform or reimagining a new process area, we start with AI first approach. And Wipro Intelligence is our go-to AI solution because we have built platforms, delivery platforms around that in each of these contexts. So I'm not calling out AI revenue separate, but having said that, every project, every new, whatever deals that we have in the pipeline, it will be embedded with AI. and with the AI first approach.
I just want to get a sense of, in April 2025, when you saw how the entire climate was at that time, tariff was something which was in play. Now in April 26, you have the geopolitical risk, which is mostly West Asia. How do you see demand environment for IT? And there is already, a negative sentiment against the Indian IT from an AI point of view. What is your perspective on that?
So there are multiple parts to it. Number one, if you look at purely from a geopolitics perspective, right, and trade and tariff perspective, for our clients, right, they have actually inbuilt their whole strategy around that. So it's all about sensing and responding to the situation, and we don't see a significant impact on our pipeline at this point in time because of geopolitics, trade or tariff. Second, it's also important to note that, right, as the geopolitics increase, more and more countries will look for sovereign AI. More and more companies want to create a more resilient supply chain leveraging AI so that they can create a visible supply chain. So in that context, again, the AI can play a significant role for us.
Saurav, if you can also give us a sense of the kind of capabilities and a skill set which is now there in Wipro to manage AI-centric deals. Have you been able to increase the work pool with respect to how to handle AI-led orders?
That's been a primary driver, to reskill and upskill our workforce. Because that is the future. We have done, it's about skilling and giving experience both. We have tied up with various of our partners and hyperscalers to take all our employees today through different levels of knowledge and competence level on AI, depending on the area. So be it working with Microsoft or AWS or Google or others, as well as our inherent. So that's the basis of this, and that's how we are confident that as demand comes back, we would be able to manage the supply side of the talent side.
Finally, Srini, I know I'm running out of time. Do you see FY27 to be better than FY26?
I know, Srijit, you're asking me the first question last again. But having said that, we don't give the guidance for the year. But like I mentioned before, I'll repeat the same things, right? The pipeline is very strong and solid and robust, and it is secular across countries and markets and our industries. I think our focus has to be more going and winning those deals. And let me also be honest, the landscape is very, very competitive. So you got to be very sharp, bring in consulting-led AI-powered Wipro for any deals that you want to win in the marketplace. And some of the deals are not just cost and productivity. Some of them are business outcome focused as well. So it's a market which is changing and evolving. But that's where the investments that we made, the fact that Saurabh talked about employees getting upskilled, everybody has to do AI first approach. I think that's how I see it going forward. And then also clients are having specific AI budgets where they want to invest in doing new projects. And with our Wipro Intelligence platforms, both from a delivery side and also from an industry side, will be of great help to them.